Your audience is very narrow on a robo-advisor. So we just kind of looked at the world and said, gee, I like the product offering. It's great.
What kind of advice would you give to fintech founders, like a final advice, who want to reduce their sales cycle and increase their speed to market?
Number one, you have to be in the right place at the right time with the right solution.
Like, hey, here is the problem, here is the solution, let's have a call, whatever.
I mean, we founded the company on the premise that people buy from people they like and trust. So we spent decades building up relationships in the industry.
What should a fintech founder fix or be ready with before asking for a high quality introduction, like, for example, working with you?
We don't want to represent every fintech in wealth. We want to come with 20 to 25 great names that we feel are very unique and relevant to the marketplace.
The judgment is top one skill that I don't think that AI will replace anytime soon.
The technology barrier doesn't take 2 to 3 years to build a competing technology. So your open runway of being in the lead is much shorter. So
our guest today is Paul Renken, co-founder and chief operating officer of Advintro, and also chief operating officer and editor of Advintro Edge magazine. Paul brings a rare combination of capital markets, wealth management, advisor technology, enterprise sales, and fintech go-to-market experience. Before co-founding Advintro, Paul held senior roles across Folio Investing, TradeWeb, E-Trade, Bimeo, Harris Direct, Credit Suisse, Dane Bosworth, Arthur Young, and his own research consulting firm. Across his career, he has worked on fixed income trading, portfolio analytics, advisor front-end tools, wealth management platforms, investment products, capital markets distribution, enterprise sales, pricing models, acquisitions integration, relationship management, and strategic partnerships. Today, through Advintro, Paul helps fintech companies scale by providing high-quality introductions, go-to-market strategy, fractional sales leadership, business development expertise, and access to a global financial services network. Paul, welcome to God's Grit and the Fintech Podcast. It's great to have you today. Hello, fintech leaders and builders. This is the next episode of our God's Grit and the Fintech Podcast. This is the show for fintech leaders who are not afraid to take the risk, to reap the reward, and build the brighter financial future together. And today we have a great guest, our friend and venture partner, Paul Renken from Advintro. Hello, Paul. How are you doing today?
Hi, Vasyl. I'm doing well. Thank you.
And thank you for joining us today. To get started, Paul, you have worked across capital markets, wealth management, advisory technology, trading platforms, and focusing on fintech sales. So what experience mostly shaped the way you think about the fintech go-to-market today?
It's been a combination of things. So, I mean, really the building over my career. So I first started more in the capital markets, investment banking side of the business, and you worked on bringing companies public. At the time, 30 years ago, 20 years ago, you could do an IPO for $50 million, $100 million would be a small IPO. Medium IPO would be 300 million. A larger one might be $1 billion. But so I really enjoyed working with the young companies, seeing them on their growth trajectories and how they're scaling their companies. So it gave me a very good insight into multiple industries. And then I went to work more on the wealth side of the business midway through my career, at E-Trade, and ran several business units there, which gave me firsthand advisory experience and then distribution of products to our customer base. But then it was very interesting going over to TradeWeb. So I went to the dark side and went to the vendor side of the market and actually worked for what I would consider a very large, successful fintech, TradeWeb, which is a large fixed income platform. We had about 100,000 advisors on the platform. So it was very interesting to see the various dynamics at the what I would consider the large wirehouses in how they look and feel from a product and curation point of view. So it kind of runs the whole spectrum, and that's when we started Advintro, when my partner and I 7 years ago, and I really enjoy working with young entrepreneurs. I like the mindset, the drive, the ambition, their goals, and just the as you mentioned, the true grit that it takes to pull something forward. So it's been a very interesting, circle in my career coming back to what I really enjoyed most.
Paul, so you decided to start Advintro
Yes.
and move from the like a corporate career to running your own agency, so which is like a B2B sales partner for fintech companies right now. So can you tell me, why did you decide to start the Advintro actually?
Wim and I, my partner today, we're working together, and we were selling a large robo-advisor. And your audience is very narrow on a robo-advisor. So we just kind of looked at the world and said, gee, I like the product offering. It's great. But 99% of our people that we know don't really want a robo or need a robo. So there wasn't a lot to talk to them about. So that's where the idea was kind of born in that. Why don't we represent multiple fintechs and choose the fintechs that we want to represent to the marketplace and bring more of a curated list of great fintechs to people that we know.
More questions on Advintro. So what does Advintro do for fintech companies more specifically? And why does this fractional outsource sales model work particularly well in financial services industry?
I mean, we founded the company on the premise that people buy from people they like and trust. So we spent decades building up relationships in the industry, across all facets of the industry. And one common theme is that, once you build that trust, and it takes an awful long time to build that trust with a buyer, there's a great relationship there that can grow and develop things forward. So we really looked at it from that sense in that. Let's bring a curated list of what we consider some of the leading fintechs in the industry to our network. And it's that element of what I would consider curation. People are very busy in these, that are buying technology in these companies. They're building projects internally. They're wearing many hats, and they just don't have the time to look at the companies. So, in a given year, we probably look at between 150 and 200 companies. All the people in our firm. So we have a very good perspective on kind of what's happening in the marketplace, what people are buying, what they're they're renting or leasing. So it's a very interesting perspective on where the adoption is happening in the industry and what segments within it.
So on the market there are so many lead generation agencies, especially with the AI disruption happening. Literally, I'm receiving like dozens of different emails from different types and shapes of agencies and companies. Like, hey, here is the problem, here is the solution, let's have a call, whatever. So, but still, most of them, they are received just as like a spam or marketing, like stuff that you just don't want to reply to. So how you're different, how Advintro is different from all that type of agencies on the market?
Yep. No, and I too, everyone I know is getting inundated, and the spam filters are getting really tough to get through. So the majority of those are just going to spam, and we often consider email marketing as that's gonna, we had banner ads 10, 20 years ago. Nobody really looks at those anymore. Email is going to be the same thing. So it's just not, and AI has really changed that, where the AI has gotten so good and so granular on, finding ways to relate to me. If they're sending me a note, hey, Paul, wonderful job doing this and that. We really enjoyed that. We want to talk to you about X, Y, Z. The emails are getting very targeted, very good. The spam filters are getting better, but you're just getting inundated with them. So as a result, you just become immune to it and you don't even open them anymore. So we do the exact opposite of email marketing. We're going to warm relationships, people that we know, people that trust us, and people that we think would be very relevant for some of our fintech ideas to help them, develop their growth patterns within their company. So we are an old-fashioned relationship-based sales organization, and I would say AI has actually really helped us because it's putting much more value on that versus just building the technology per se.
So, Paul, you are focused specifically on financial services space. Can you tell me more about like what verticals within the financial services industry you have the most expertise, the best network in?
Yes. So Wim and I were both kind of born and spent most of our time in the wealth management area. So that's a very strong suit in all facets of the wealth management, from your wirehouses to RIAs to the bank wealth management channel. We know from the custody side of the business, we know that side of the business very well, and that's the core underpinning of Advintro. About a year and a half ago, we kind of looked at what we did in wealth. We don't want to represent every fintech in wealth. We want to come with 20 to 25 great names that we feel are very unique and relevant to the marketplace. So there's an element of curation there that we really value. And then we looked at the fintech market, the broader fintech market, and said, why don't we just let's rinse and repeat with what we've done within the wealth channel and create an insurance, a banking, and an asset management vertical. And we're also dipping our toes into European expansion, both European companies that want to come to the U.S. and U.S. companies that want to go into Europe. So we kind of look at those four pillars now and just kind of branching out a little bit from wealth tech, but getting into some of those related spaces in the broader fintech category.
So again, you're focused, wealth management, broker dealers, RIAs, banks, as you said, now insurance as well. So what is different in selling to the financial institutions comparing to other B2B industries?
Each organization's different. Yes, there are some similarities, and we all are in a highly regulated industry, but there's an old saying, if you've met one RIA, you've met one RIA. They're all kind of unique in their tech stack, how they look at the business, the customers that they service. Someone could service Main Street. For a large wirehouse, it could be more of an Ed Jones platform where they have 15,000 offices on small towns across the U.S. Or it could be someone that services the mass affluent or the ultra high net worth. And we're seeing a lot more expansion of the RA practices on more boutique services within those higher net worth circles, and kind of pushing what I would consider family office type services down to their ultra high net worth. So each firm is very unique. They also often have very geographic boundaries to their client base. And so, and it's different within broker dealers, even within the broker dealer community, they're different. And each one has different, what I would consider procurement and technology development methodologies that you do have to be aware of as well. So we're all in the same industry, but we're all fairly different.
Absolutely. So, I have a conversation just recently with one of the investors in our network, speaking about something you also just mentioned, the procurement readiness, meaning that every startup and even established company, they certainly need to have like a competitive product that delivers value. But in many cases, you can be stuck selling to the financial institutions just because you're not ready from the procurement perspective. Meaning that procurement readiness like a real gate in financial services, not just like an administrative detail. So from your experience, how to make the company and how to make your product really procurement ready to be seen by a financial institution like an enterprise production ready product rather than just a nice to see demo.
Yeah, and that's an early lesson we learned at Advintro, and we kind of knew it ahead of time, but it was definitely validated that you can't just bring what I would consider, two brilliant entrepreneurs come up with this fantastic tech model, and they have no market penetration yet, but you can't just bring them to the world's largest financial service company and expect that they're going to open you with welcome arms, because a lot of those people they've gone with more startups, and what has happened. So some of the mentality within the procurement groups has been that, hey, we pinned our technology around this company. All of a sudden they went out of business or they got bought and they're no longer in that vertical. So now all of a sudden they have a hole that they have to address. So the larger companies definitely want to make sure that they are an ongoing entity, that they have a direct product market fit, they have a reputation, a brand to keep up. So you kind of have to match almost the size of the fintech with the size of the organization. Now, in hindsight, though, there are some larger organizations that are getting much more nimble because they've realized that they're behind the 8 ball in innovation. So, it might take 2 to 3 years to get through their whole procurement process.
Yes.
All the I's dotted and the T's crossed, and that could be a very long process. By then, they've kind of missed the market uptake in that. So some of the companies are adopting more of a more lean model of adapting little niche solutions. If it's core to their business, they're going to build it internally. There's no doubt about that. But if it's a very niche segment of their business, and they can integrate it in and still make it look like it looks like their own, we are seeing some opportunities there for some younger fintechs to make progress with some of the larger incumbent financial service companies that have a very long procurement cycle.
Yeah, absolutely. And you touched also something about like they can build something internally. And this is a huge concern within the investor space right now, whether the new emerging fintechs, they are really defensible, especially taking into account, again, AI disruption, meaning if they're just like an LLM wrapper, and if they are just could be replaced as a feature within the larger platform or by the financial institution themselves, just again building some agent, like AI agent around their workflows, and they don't need any kind of like additional outside solution. So do you see this do you see this trend emerging? Can you elaborate on that? Like, what do you see within your clients and within your partners right now?
Yes.
Like
so
build versus buy strategy.
Yep. So we're seeing, what's interesting about it is if you look at the world, even, as far as 2 to 3 years ago, if a great idea came along, a fintech would have to raise $10 million. There'd have to be a huge build out of technology that would take, 2 to 3 years or a year at a minimum. And, that was your moat. Your technology solution was your moat, the time and expense that you put into that. And of the money that you raised, that's where the lion's share went. And then a little bit would go to distribution, marketing, building your internal infrastructure, your customer success. Those would all be almost afterthoughts, of the initial money raised in the technology build. Whereas now, two smart prompt engineers can build some really incredible technology. So it's changing the way technology is built. And we often say technology used to be the moat. Now the moat is distribution. It's your time to market. You have to react and get to the market very quickly, and get as much market share as possible, because the technology barrier doesn't take 2 to 3 years to build a competing technology. So your open runway of being in the lead is much shorter. So it's kind of changing how companies, number one, are coming to market and what they're valuing in that. Yes, the technology has to work fine and it has to be very integratable, but in today's world, it's all about data and integration, more so than just about the what I would consider the actual technology platform build.
So what do you think, speaking about, do fintechs usually fail because of a weak product, or more because of the weak distribution? And if it is really changing right now?
You have to be right on a lot of accounts. Number one, you have to be in the right place at the right time with the right solution. That doesn't guarantee success, though. It takes execution. It takes the right leadership team to drive it forward, the right technology partners. A lot of things have to happen, because you have such a short window to get that first mover advantage in the marketplace. You have to have a lot of things go right. But, timing is everything. Being right early is being wrong. If the market's not
Okay.
ready for this solution, or you're not solving a buyer's specific need, just because you build it doesn't mean they will come. They may not come. So you have to be very cognizant of the solution and the problem that you're solving in the marketplace.
So, Paul, you mentioned that nowadays you must to be lean, and I will agree with you, fully agree with you on that. So you need to have some very narrow wedge at the start of your business and build something very specific and niche. Again, you could potentially as a founder have this risk of being replaced by a feature or just few prompt engineers working internally in the financial institution. So still, how do you see what separates a good fintech demo from a product that institutions actually buy and scale nowadays?
The biggest difference that I see, where the trap that I see is people go down the road of showing a potential buyer of what they've built. That's great. It's a very time-consuming process. Attention spans have gotten really short. So you have to be very relevant in the very beginning of the conversation and address, Vasyl, what problem are you encountering internally, and how can I, in this software or this platform that I built, this is how we will solve that problem. They might not use the 30 things that I've built. They may only use items 3 through 5, but if I can solve their problem with items 3 through 5, my foot is in the door, they're listening, and they could very well be a buyer. And that you also touched on feature versus a whole platform. That's a very important thing, because I have not met a CTO that wants to really onboard another new vendor. They're oftentimes managing between 80 and 120 relationships. The CTOs and the internal folks would rather manage fewer vendors that do more for them. So they would rather manage 60 people that do twice as much versus 180 or 120 vendors that each do one thing. So we're seeing kind of a land and expand theme emerging in the market, where get in by solving a very unique, specific problem. There's a saying in the marketplace, there's riches and niches. But once you're in the door, then how can you solve and become a true partner to that firm and expand that relationship and do other things in other departments or different verticals within that company? So.
All right, so let's unpack this a little bit. So, okay, let's think about the buyer's logic. If we can define something like a procurement scorecard or like procurement readiness scorecard, let's say, speaking about what should a fintech founder fix or be ready with before asking for a high quality introduction, like for example, working with you. And that, let's unpack it in the way, okay, assume we have this scorecard. What are 3, 4, 5 top factors that the high quality buyers would be looking for, not only in the solution they are willing to buy, but with the vendor? What type of qualities they would be
Number
for?
one of the top qualities that I talk to people about is you have to be a partner. Being a vendor is different than being a partner. Being a partner means you're in the trench with them. You're sharing their pain. You feel their pain. You're helping them get through that pain and helping them get to a better spot. Once you've got there, that's where the whole trust element comes in, is that you're helping to build trust, establishing trust, not just solving this need and, hey, Vasyl, we solved it. I'll see you next year when the contract's up again. No, you're in the trench with them. That buyer, your main buyer in that firm is most likely on the business side, if it's dealing with a business solution. They're putting their reputation on the line. So at these large companies, it's not necessarily the idea that, if I bring these guys in, I'm going to win more. These larger organizations are more concerned about not losing. If I bring this vendor on, what can go wrong? How could I potentially lose my job if I'm the buyer of this technology and something does go bad? Say it doesn't get delivered, it blows up something else, there's a security leak, whatever the issue is that buyer is putting their in essence, their job on the line. So you have to take that very serious and address each component to make sure that they want to move forward, because they're going to get backlash from procurement. Procurement's going to see something with that company. Hey, they're not big enough. They haven't been in market long enough, but no one else does what they do. The business person's going to have to put their reputation and sign off on that. If procurement finds a hole that, hey, they haven't been in business 3 years, that business person's reputation is on the line. So they have to sign off on that. So, and they're only going to do that if they trust you and they know you're the right person to solve that problem. So you really have to get down into the weeds. And I always say there's multiple votes at the table. There's a procurement vote, there's a compliance vote, there's a legal vote. These big companies, the larger the company, the more votes there are at the table. And you have to, like you say, check all those boxes off. And if a box isn't checked, that's going to be an issue that you're going to have to address.
Absolutely. So, Paul, let's touch the pricing topic for a while. So, what we have seen is that there is this border, let's say, when the buyer is thinking about you as a partner vendor, as a return on investment on their investment, and at some point of time they start thinking about you as the cost.
Yep.
So how would you split these two situations? Like how not to how to be the return on investment for your clients, but not to be seen as the cost again. Like what kind of pricing policies you would need to have?
We always advise on being extremely transparent with pricing, because the buyers at these companies, they're dealing with many other vendors as well, and they can tell when you're being transparent and open with them and you're being a partner that you really want to solve the problem, or are you just trying to rake them over the coals and make as much money and kind of walk away from the service side. So you have to be very cognizant of. It also depends, I think, is this a revenue producing item? Is it going to bring immediate revenue in, like a proposal system could bring, if a client is able to use it, a prospect is able to use it to land a new, $2 million account, they're going to pay a lot more for that than something that's going to save them some expense. So it tends to be, you can price a little richer on the, what I would consider, because the return is easily justifiable, that if we use this software, we're going to convert 50% more of our proposals, and that has a direct bottom line impact. Whereas an expense saving type of thing might save a lot of headcount or IT expenses. That might get prioritized less, and that might be priced a little thinner. So you have to be cognizant of where you're at, but you always have to be transparent. And we're always big fans of landing and expanding. So get in the door with a very favorable pricing. If you're talking to a large institution that is a household name, get in the door. Get on the vendor list. Make sure you're a partner of theirs, and then you can make more money in the future by expanding into other solutions with that business, because you're an approved vendor at that point in time. You don't have to go through that whole procurement nightmare. So once you're an approved vendor, it allows you to open up quite a bit more. And that's another thing I want to point out too on the AI. We're seeing a lot of companies getting into other people's spaces. So, it used to be more of a, say a system was a proposal generation system, but once they have a certain amount of scale in the business, they could start a note taker, or they could start, another segment of the business, a portfolio analysis system, because they're in as a vendor, and the technology is easier to deliver these days with AI. So we're seeing a lot of, I'm just going to go back to that theme of landing and expanding. Get in the door, become a trusted partner, and build a relationship from there, and that's how you'll profit longer term.
So speaking about the sales life cycle, what do you think what parts of the sales life cycle would be fully automated with the agents, and what part would still be owned by humans?
It's interesting. And Vasyl, I think you're experiencing this in your business as well. It's changing how you guys work. So,
yes.
A lot of the code is now written by, it's generated by the system. So you're doing more what I would consider systems analysis work and judgment work, where you need that judgment.
Yes, judgment.
So the AI cannot judge what to do right. I can go to any AI agent and say, gee, I want to get healthier. Give me a workout routine that I can do to make me healthier. Yes, it's going to give me a great workout routine. It's not going to do the work for me. A human needs to be in there in judgment. And so that's where the key shift is going to be in the marketplace. And it's happening right now, is that away from the mundane tasks that used to be that we used to have to do, but we're going to be using our head more on thinking smarter. How can we integrate this better? What other systems should I integrate into this to make the workflow enhancements more productive? So it's really changing how we're working, but I'm going to use that term judgment. A human's going to be the final judge on how that AI on how the AI is overseen and used in each situation.
So I agree with you. So someone need to be accountable and ultimately own the results of any workflow, of any business outcome, and the judgment. Yeah, the judgment is like top one skill that I don't think that AI will replace anytime soon. So, Paul, to wrap up our conversation, few last things. So, just recently you have launched the Advintro Edge magazine, and I'm reading every single piece of it. So,
I feel sorry for you.
Yeah, we have our own Fintech Signals magazine by INSART. We are more focused on like a product side, so you're more focused on go-to-market. So, can you tell me, how does this kind of thought leadership help you to support your clients' growth and sales life cycles?
Yeah, it's been a very interesting exercise. So the idea first came up last year that, we started, so we have a portfolio of companies. We represent about 30 companies right now, and they're in all segments of the area between wealth, banking, insurance, and different. Some are on the front office, some are on the back office. They're spread all over there. But what we started seeing are themes. Rather than talking to someone about a specific company, I'd rather have a conversation with you, Vasyl, about what themes are you. We're seeing some themes in the marketplace: organic growth, operational efficiencies, workflow automation, all these different things that AI is making a big impact on. And are you seeing those within your organization? Where are you having troubles adopting some of those, efficiencies or productivity enhancements? So then once we identify a need, then we can come in and say, oh, geez, Vasyl, I didn't know you had an issue with that. We have a company that does X, Y, Z. Would you like to talk to them? Do you know what I mean? So we've kind of flipped the sales process into, when I worked for one company selling a fintech, I was a hammer and everyone was a nail. In our situation here, I want to know what problems you're encountering, what you're trying to solve for. And then at that point, I can put my thinking cap on and saying, oh, we've got a couple of companies that you should probably talk with. So it's a much different conversation. It's much more of a needs-based consultative sale, which I think is good. And those are the themes that we're seeing in the marketplace. I mentioned operational efficiencies, organic growth. Data is the new king. Everything's about data. You have to clean the data first before you get good results from the data. There's what I touched on earlier, family office, very high net worth focused types services for ultra high net worth people starting to come down into the $5 million accounts. These are services, add-on services that companies are looking to take on. The day of an advisor charging 100 basis points for a managed portfolio that's outsourced by someone else is providing nothing unique. And so we have the philosophy that advisors are going to have to do a lot more to justify those fees that they are charging. And one of the ways of doing that is expanding your palette of services that you offer to the marketplace.
Paul, thank you for sharing this. And I would add that I see that like every company needs to be a media company in our environment right now, because you need to grab some attention with your clients. and still the thought leadership, which is, let's say, non-fully AI automated or generated, is still a big deal on the market. To wrap up our conversation, Paul, what kind of advice would you give to fintech founders, like a final advice, who want to reduce their sales cycle and increase their speed to market?
I think you have to have passion, and they do have passion about what they're doing. They have to be solving a specific need in the marketplace rather than just we're building a portfolio management software system. What within portfolio management is driving the person at a large asset manager firm or an aggregated RIA that's making portfolio decisions? What do they have? Is it a tax overlay that they're missing? What are they missing? So kind of come at it from that. That niche. I can solve that problem for you, and I can address a problem I'm sure your advisors are having. So identifying a specific need and solving that need, and making sure, number one, that your go-to-market strategy is sound and that you have pricing figured out. You have your messaging. Is your messaging consistent on your website to your PowerPoint deck that you're showing them in your first meeting, your second meeting? Does it address the various votes at the table? Does it address procurement? Does it address legal? Does it address the business? Can marketing do it? So you have to be kind of in sync on a lot of items. And we found that those companies that have that clean message, their pricing down, and their what I would consider their time to market and getting that company up and running sooner rather than later, as soon as they can, if they want to move soon, they'll be very successful in the marketplace.
Absolutely. So, Paul, for everyone who are watching us today, what would be the best way to connect with you?
I'm on LinkedIn. People can go to our website. It's www.advintro.com. Happy to take any inquiries and talk to anyone. So and I think the magazine's a great thing because we've written the magazine with the buyers in mind. What is an RA looking to read? What content is out there? It's written by humans for humans. So we're just firm believers in relationships. So just give us a call, and you can reach us in multiple ways.
Of course. So you can find the contacts of Paul Renken in the description to this video, his LinkedIn, the link to website of Advintro, and also don't forget to subscribe to our channel, to Advintro Edge magazine by Advintro. And Paul, thank you for being with us today.
Thank you, Vasyl. Always a pleasure. Appreciate it.
Absolutely. For everyone who are watching us today, also don't forget to subscribe to this channel, like this video, share it with your peers and with your colleagues. Me, Vasyl Soloshchuk from INSART, and it was Paul Renken from Advintro. Thank you, and let's keep building fintech and brighter financial future together. Bye-bye.
Thank you.